Welcome to the deep dive. Today, we're really digging into Cadence Design Systems, specifically their first quarter 2025 earnings call and, the financial news floating around it.
Yeah, we've got quite a bit to work with. The official call remarks, summaries from Guru Focus and Captide, a ZAS report, and even a piece from the Motley Fool.
So, our mission here really is to get past just the headline numbers. We want to understand what's driving Cadence's performance, where they see things going, and how they fit into the bigger picture of tech right now.
Exactly. It's about the story behind the results, the innovation drivers.
And for anyone maybe less familiar, Cadence Design Systems, they're basically crucial for designing modern electronics. They make the EDA, the electronic design automation software, and they do system design stuff too, essential tools.
Absolutely fundamental. Okay, so Q1 2025. It was pretty strong for them.
Strong is maybe an understatement. Let's break it down. What were the headline figures?
Right, so revenue hit $1.242 billion. That's a jump of 23% compared to the same time last year. And importantly, it beat their own guidance.
Okay, beating guidance is always a good sign. And it wasn't just revenue, was it? Profitability looked good too.
Yeah, definitely. Non-GAAP earnings per share, that's often a key metric people watch, came in at $1.57. That's up a hefty 34% year over year. And again, better than they predicted.
34%, wow. And the GAAP EPS.
But that was solid too, at $1 per share.
And how about their operating margins? How efficiently are they running the business?
They saw improvement there as well. The non-GAAP operating margin was 41.7%. Last year in Q1, it was 37.8%. So a nice increase.
Almost 42%. That's quite efficient.
It is. And the GAAP operating margin was 29.1%. So, both measures trending up. It really points towards strong demand meeting, pretty effective execution on their part.
So what were the main things pushing these numbers up? The reports mention a couple of key drivers.
Yeah, the big ones seem to be really robust customer demand for their latest tech, the innovative stuff, and just generally a lot of design activity happening across the semiconductor industry.
So people are still designing the next generation of chips, even with, all the economic chatter out there.
Seems like it. The need for these advanced tools isn't really slowing down, driven by those big trends we keep hearing about.
And this positive momentum isn't just a Q1 thing, right? They actually raised their forecast for the full year 2025.
That's right. And that's a pretty strong signal, isn't it? Shows they're confident this isn't just a blip. They bumped up their full year revenue projection, now looking at $5.15 billion to $5.23 billion.
Okay, a slight increase from their previous range. What about earnings for the year?
Also nudged upwards. Non-GAAP EPS guidance is now $6.73 to 65 to 75 cents.
Okay. And GAAP?
GAAP EPS is expected between $4.21 and $4.35. And they also expect that non-GAAP operating margin to keep climbing through the year. They're targeting between 43.25% and 44.25%.
That's quite a target. Higher than the 42.5% they managed in 2024.
Definitely ambitious, but reflects the Q1 performance, I guess. And they're generating good cash, too. Operating cash flow projected between $1.6 billion and $1.7 billion for the year.
Solid cash flow. And are they returning some of that to shareholders?
Yes, they are. They've committed to repurchasing at least 50% of their annual free cash flow in shares. They already bought back $350 million worth in Q1.
Okay.
And they plan to do another $175 million in Q2. So, yeah, definitely returning value.
All right, so the big picture looks, well, pretty healthy. Let's dig a bit deeper into the specific business segments. I saw some really eye-catching numbers, particularly around their IP business.
Oh, absolutely. The intellectual property or IP segment was really the standout. Revenue growth there was 40% year over year. 40%.
Wow, what's behind that kind of jump?
It seems to be a combination of things. Strong demand related to AI, definitely. Yeah. Also chiplet architectures, where you combine smaller specialized chips. It's a growing area. And just the general build out of the foundry ecosystem.
So they're providing the building blocks for these complex new designs.
Exactly. And they mentioned a major expansion deal with a big global systems companies specifically for AI and HPC, high-performance computing, design IP. That's a huge validation.
Sounds like it. Okay, what about their traditional bread and butter, the core EDA software?
Still very solid. Grew 16% year over year. Not the explosive growth of IP, but still really strong.
And what's driving that?
A couple of things mentioned. Continued adoption of their digital full flow. That's their main suite of tools for digital chip design. And really strong momentum for Cadence Cerebrus.
Yes, the AI solution for chip design optimization. We've talked about that before.
Right. And it seems to be gaining serious traction. They said nearly 50 new customer logos just in Q1 alone. And it's been used in over 1,000 tape outs now.
1,000 designs finalized using Cerebrus. That's significant adoption.
It really is. They even called out specific wins, like MediaTek and Renesas using AI-driven flows to make design changes more efficiently. So AI is really getting embedded there.
Seems like AI is a thread running through everything. What about the system design and analysis part? That also looks strong.
Extremely strong, over 50% year-over-year revenue growth in that segment.
50%. Okay, what's going on there?
A lot of it is attributed to, again, AI-driven optimization solutions, but these are integrated with their physics-based simulation platforms.
Mhm.
So think analyzing how complex systems work in the real world.
Like virtual testing.
Exactly.
Right.
And their digital twin reality data center product, basically making a virtual copy of a data center to optimize it, that's apparently getting good traction.
Plus, the Beta CAE acquisition seems to be boosting things, especially in areas like automotive simulation.
Right, the simulation software company they bought. Okay, so it's not just the tech itself, but also the partnerships they're building, isn't it?
Crucial. These collaborations are key. The expanded partnership with NVIDIA is probably the biggest headline there.
On the new Grace Blackwell architecture. Yes. Cadence tools are being accelerated significantly by NVIDIA's tech, and they're actually collaborating on developing what they call a full-stack agentic AI solution, basically AI that can manage complex design tasks more autonomously.
Interesting. Agentic AI for chip design.
Yeah. And they're also an early adopter of NVIDIA's Omniverse blueprint for building digital twins of AI factories. So really leaning into that data center optimization angle.
They seem very tightly integrated with NVIDIA's roadmap. Any other key partnerships?
Quite a few, actually. Rapidus, the new Japanese foundry, made a big commitment to Cadence's core EDA tools. That follows earlier work they did together on 2-nanometer IP.
Building trust with the next-gen manufacturers.
Exactly. They also deepened their partnership with Socionext, especially around AI-driven digital tools, and worked more closely with a major hyperscaler, think big cloud provider, on digital and verification software.
So embedding themselves deeper with the big cloud players, too?
Right. And they joined the Intel Foundry Accelerator Design Services Alliance. So playing across the foundry landscape. Oh, and they also mentioned some good competitive wins for their hardware products like emulation systems.
Even though production is tight.
Yeah, apparently demand is outstripping their ability to produce the hardware right now, which is, a good problem to have, I suppose.
Definitely sounds like it. And they're also buying companies to bolster their IP portfolio, right?
Yes, that's another key part of the strategy. There's the pending deal for Secure IC, which adds security IP. That was announced last quarter.
Okay.
And then more recently, a really significant one. They agreed to buy ARM's Artisan Foundation IP business.
ARM's Foundation IP, what does that include?
That's the real basic building blocks for chips. Things like standard cell libraries, memory compilers, general IOs, stuff that pretty much every advanced chip needs. And this is optimized for the latest manufacturing nodes.
So acquiring those fundamental pieces directly from ARM, that sounds like a major move for their IP offering.
It's a big deal, yeah. Really strengthens their hand in providing those core components.
Now, amidst all this growth, there's always the question of the broader economy. How is Cadence seeing the macroeconomic picture? Are they worried?
Well, according to the management commentary on the call, they haven't really seen any major shifts in customer behavior yet.
Meaning companies are still investing.
Yeah, it seems the push towards those big transformative technologies, hyperscale computing, 5G, autonomous driving, AI, that's keeping the investment flowing into next-gen designs.
And their business model probably helps provide some stability, too.
Absolutely. They have what's called a ratable software model, mostly subscription-based. That, plus a really strong exit backlog from Q1, $6.4 billion.
$6.4 billion, wow.
And about 80% of their revenue is recurring. All that gives them pretty good stability and visibility into future revenue.
Makes sense. Less vulnerable to short-term swings.
Right. They actually said $3.2 billion of their current remaining performance obligations, basically contracted future revenue, is expected to turn into actual revenue within the next 12 months.
Okay, good visibility indeed. But I did see one note of caution, specifically about China.
That's true. Despite having a strong Q1 in China and seeing lots of design activity there, they're keeping their revenue outlook for the region flat for the year.
Why the caution?
Just citing the macroeconomic uncertainties specific to China. So performing well now, but being a bit prudent about the forecast there.
Okay, understandable. And what about things like export controls or tariffs? Are those impacting them?
They're basically assuming the current export control rules stay more or less the same for now. On tariffs, they pointed out that their software and services aren't subject to them.
Right.
And for hardware, they have a diversified supply chain manufacturing in the U.S. and elsewhere, which helps mitigate potential tariff impacts.
Okay, so managing those risks. There was also an interesting point about how the rise of GPU-based servers might affect their licensing.
Yeah, that's sort of an evolving area. They're sticking with their traditional licensing models for now, but they're also offering more cloud solutions.
Like bundling hardware and software.
Sometimes, yeah. Packaging things together for the cloud. So how customers actually use their tools in these big GPU-powered environments, that could potentially influence how they structure deals down the road. It's something to watch.
Interesting. Okay, one last point, shifting gears slightly. They got some recognition as a good place to work.
They did. Recognized by Fortune and Great Place to Work, came in at number 11 on the list of 100 best companies to work for.
Number 11 is really high.
It is. Speaks volumes about their company culture, being high performing, but also inclusive. And that definitely helps attract and keep the talent they need to drive all this innovation.
Absolutely. Okay, so wrapping up this deep dive, the takeaway seems pretty clear. Cadence knocked it out of the park in Q1 2025.
Yeah, exceptional results, really. Driven by that strong demand, especially for anything touching AI, and boosted by smart partnerships across the industry, raising their outlook just reinforces that confidence.
And it feels like their focus on innovation, AI, chiplets, system design, the acquisitions, it's really positioning them well for where the tech world is heading, right?
Definitely seems that way. They're right in the thick of these critical, complex design challenges. Even with that note of caution on China, the overall trajectory looks, well, very strong.
So here's something to chew on as we finish up. We see Cadence investing heavily in AI to automate and improve chip and system design, which is already incredibly complex and only getting more so. How might this continued push towards AI-driven design fundamentally change how technology gets developed in the future? What kind of maybe completely new innovations could that unlock, potentially even in industries way beyond just semiconductors?